Things every trader must know before starting trading. It's an important topic. Most traders think that they can just go out there and start trading. That is not trading, that is gambling. So today's topic is going to be about the most important things that a trader must know before he even thinks of starting to trade. So these things he must know even before he starts to paper trade. So what are these things and why are they important? First, let me tell you why these things are most important. These things are important because they must be learnt before any mistakes are committed. In this market, no mistake is tolerated. In this market, no mistake is acceptable. No mistake is forgiven. So you must understand that any mistake you do in this market will be punished severely. So to avoid that and to protect yourself and to protect your capital, you must learn these things by heart. So let's get to today's topic. So the first thing that every trader must know before starting to trade is that his focus must be on the loss side, not on the profit side. What does that mean? Every trader, when he starts trading, he starts to trade with only profits in his mind. All he thinks about is profits. Why should you trade? Why are you trading? If these questions are asked to you by your elders, by your parents, by your relatives, the only answer you have is to make profits. See, all of us start trading for profits, right? Nobody starts trading to just retain capital or to make losses. So the answer is pretty obvious, to make profits. But the problem starts when your focus is only on the profit side. It is impossible to make only profits in this market. You are bound to make losses, and when you make losses, it is important to accept those losses. Accepting losses is very important. We are all taught by our elders right since school that you must always win. You must always go out there and win. You must win this race. You must win that race. You must get 98% marks, 99% marks, 100% marks. It was fine when you were in school. It is not fine in this market. That kind of an attitude will ensure that you are never successful as a trader. In trading, being right even 50% of the times is good enough as long as you have a good risk to reward ratio. So right since childhood we are taught that we must win at everything we go out there and do. We must get out there and achieve our target. Aren't we all taught that? Each one of us thinks that whenever we get out of the house, we must get this thing done, we must get that thing done. If you go out of the house today for an exam, everybody wishes you best of luck. Go out there and kill it and come back. You are given the best of wishes, you are given the best of opportunities, the best of facilities to study so that you can go out there in your school, in your college, and you can top in your exams. You're given the best of bikes to ride, you're given the best of books to read, you're given the best of opportunities of everything. And the expectation is that you must win each time. Every time you go out for a job interview, everybody at home is expecting you to land that job. They think that you will come back with good news, and that is where the problem lies. See, that's not a problem as far as everyday life goes, but when it comes to trading, that is a big problem. So let me tell you, in trading, there is no always winning. There is only winning sometimes and losing sometimes, or in some cases, winning sometimes, losing many times. But when winning big and losing small, that is what is going to make you successful in your trading career. So you always have to remember this point, that you cannot go out there and you cannot trade in the markets to win every time. No, it doesn't work like that. Every time you go out there, you must go out there with your focus on the loss side, not on the profit side. You will make profits automatically. The important thing here is to put your foot on the brake and cut your loss when you are making a loss. If you do not cut your loss at the right time, you're bound to make big losses, and the big losses will not be covered by the small profits that you are making. In a previous video of mine here, I have already covered the topic of how small profits nullify the small losses, and if you take care of your losses, if you cut your losses quickly, then all you are left with is big profits. Please go and watch that video. So always remember, your focus should be on the loss side. Focus on your losses, focus on taking your stop losses, always keep a stop loss, never ever go into a trade without a stop loss, and always ensure that you're coming out with a small loss and whenever you're coming out with a profit, ensure that your profits are bigger so that they can cover your losses, your taxes, and leave you with a net profit. Now the next most important thing here is you must follow one strategy and one trading method. Most people keep jumping here and there, here and there. Most newcomers will keep searching for strategies. Strategy is not important, it is just a small part of the entire game called trading. Most youngsters and most newcomers to the market will start trading with one strategy. Now let's say for example they start using MACD. It's a very popular indicator. So you start using MACD and you make a profit, you're very happy. 1 or 2 days you make a profit, third day onward, fourth, fifth and sixth day you start making losses. You will think that okay, MACD is not working, you'll dump it. Next you will go to Bollinger Bands, again the same method, again the same problem. Then you'll go to RSI, then you'll go to moving averages, then you'll go to some other indicator, and all indicators will help you in specific scenarios. Sometimes when there is a trend, sometimes when there is a long position, sometimes when there is a short position. So each indicator has its own limitations. If you implement the same indicator in every situation, there are situations when it will fail, there are situations when it will succeed. But if you don't implement that system with that specific indicator in every scenario, you will never be able to make profits to cover the losses that you're making with that system consistently enough to be profitable. If you keep jumping from this system to that system, from one to the other every now and then just because you made profits for a couple of days and then you started making losses for the next few days, and then because you're jumping to another system, the other system is not going to cover for the previous losses that you've made. How can it? Because it's a different system. Every system will have its own primary rules and methods of application. So no system can pull you out of the losses unless you implement that system and accept its profits and losses. A method of trading is just a method. You must understand that. So stick to one system and that system will provide you your bread and butter. So for instance, my bread and butter is CPR. All my strategies are built on CPR. I've shared a lot of my strategies with you on YouTube. So please go ahead and watch those strategies also if you haven't watched them already. These strategies have given me losses. These strategies have given me profits. But when they give me profits, these profits are big. I ensure that I let my winners run. I ensure that I'm going big on my profits. But when I take my stop losses, I take them really seriously. I cut them very quickly. I ensure that I'm not running with my losses. I can proudly say that not a single trade has ever gone in which I have shifted my stop loss just because of emotions. If fear and greed don't come, then hope has no place. So all you have to do is control your emotions, never ever move your stop loss, and always be proud of taking your stop loss. Which leads me to my third point. And the third point is that today is not the last trading day. Markets will open tomorrow, markets will open the day after tomorrow, and they will open for years to come. The question is, will you allow your capital to be built, or will you destroy your capital by the wrong trading methods, by method jumping, by not taking stop losses, by not handling your own psychology in the live market? The question is not whether market will open or not. Markets will open. Tomorrow again there will be an opportunity. If not today, tomorrow is always there. If not tomorrow, day after tomorrow is always there. See, the problem here is not about when you will make profits. The problem here is if you are making a loss today, today is the time to cut the loss and get out of that trade. Leave it there, get away. Tomorrow again there will be an opportunity. A lot of people and a lot of new traders do this, that if today there is a loss that they are facing, they might be overconfident, okay, that today I'm making a loss, but the market is going to reverse. And then when the losses grow big, they will cut them in deeper losses, then realizing that okay, the market did not reverse. That is gambling, that is not trading. Trading must be treated like a business. Deploy only 1% of your capital into every trade, and always ensure that today is not the time to make profits. If today you are making losses, accept the loss, get out of the trade. Do not revenge trade, Do not punch the buy order or the sell order looking for another trade, hoping that this trade will work out. Any trade can fail anytime. It is impossible to make profits in every trade. So do not have the fear of missing out and do not revenge trade. It is important that you don't revenge trade. It is important that you go out there and trade the next day, not to recover the loss, but to make good deal of profits if the trade goes in your way, and if it does not, then again to accept the stop loss. Stop loss is your only friend in the market. So as beginners, you must always remember that no trade can be initiated with the stop loss in the mind. Never. The stop loss must be put in the system and the stop loss must be taken. The next point, and a very important point again, is you must learn to earn. Tell me something. When you see doctors, when you see engineers, when you see lawyers, when you see a sportsman, how many people do you know who have just gone out there, stepped into the field of their work and started to work? Are you satisfied if you go to a hospital with some illness or with some injury and there only the junior doctors or the residents see you? Are you okay with that? Your expectation is that at least once till your time in the hospital, a senior doctor or a senior consultant should come and see you, isn't it? So why do you think that today you can sit in front of the screen and you can drop your capital on it and you can make profits on the trade? Trading is a business. You must learn the rules of trading. You must learn the rules of the game. You must know how to run the business. That is when you will be able to be successful. It's a hard-hitting truth that trading cannot be learned just like that in days to come. You will take months, you will take years, sometimes more than 1 year, more than 2 years, sometimes 3-4 years. There are people I know who have spent more than 10 years in the stock market not knowing how to trade and then suddenly emerging as successful traders. So you must learn first. Start reading, watch YouTube videos, watch informative channels, learn by talking to other people, learn by talking to professional traders if you know any. Learn by watching interviews. There are so many things to read about. Start following good news channels. Don't base your trades on news channels. I'm not saying that. That's not the right method. I'm not talking about trading based on news, so don't get me wrong. What I'm talking about is start to listen to experienced people. I'm not talking about their calls. I'm not talking about their tips. I'm talking about their experience regarding trading. You have so many senior traders. You can learn about them. So first and foremost, get educated. You have a lot of stuff on the internet these days. It's become very easy these days to get information. There is no channelized form of education in trading. There is no trading degree per se in colleges where you can actually attend the courses like you have in other professions. But you can be a self-learned, extremely successful trader provided you learn first, invest in yourself first, invest in knowledge first. Don't be in a hurry, don't rush, give it a couple of years, give it time, watch charts every day, read information every day. Like I said previously in this video, decide one system, learn one system, decide that system, and then go ahead with it. For a brief example, I'll just tell you that traders focus on technical analysis and investing requires fundamental analysis. So you have to choose one path. Don't become a technical analyst and a fundamental analyst. If you were to ask me, I know nothing about fundamentals. I don't read company balance sheets. I don't know about PE ratios. I don't know anything about fundamental analysis. But I am well learned about technical analysis and I know my system well. I have learned technical analysis. I know price action. I know my pivots well. I know my support resistances well. And that is my bread and butter. So that is where I am specialized in. And I know that out of 10 times, even if I take losses 5 or 6 times, I will make it big, their balance 4 or 5 times. So I'm not worried about my trades any day. So I want you to follow the same system and the same pattern going ahead in your trading career. And the last point here that I've made for you is start small, miss small. What does that mean? Nobody tells you how much capital you should deploy in the stock market. It's something that you and you alone can decide. There are so many of you who are watching this video. I cannot personalize this for everybody, but I know that you must be probably less than 20 years old, or you must be in the 20 to 30 age group, or you might be in the 30 to 40 age group, and some people in the 40 to 60 age group also must be watching these videos. The capital amount that you're going to deploy in your trades, it all depends on what your risk appetite is and how serious you are about trading. Take me very seriously here. If you want to become a trader, you will always be a trader. So choose that path only if you decide to take up trading as a profession in the future. Don't take up your path to trading just because you don't have anything else to do, or you hate your job, or you want to quit your job, or you hate your boss, or you hate your colleagues, or you don't like getting up every day and going to office every day, or you don't like to travel to office every day. These are not the reasons to go to trading. Trading needs passion. Trading needs learning. You need to be passionate about trading. You need to love trading. You need to love watching price. You need to love price action. You need to love everything and every aspect about trading. Only then and then only should you take up trading as your profession. Trading cannot be just a side profession. It needs to be treated as your main business. So the capital amount that you're going to put into trading is something that you will have to decide. But one thing that I will tell you here is, if you have, say, a capital like 25 lakhs, 30 lakhs, 50 lakhs or a crore, don't go on and deploy the entire amount into a single trade. Don't start there. If you are starting out, start with a small capital. Start with say 3 lakhs, start with about 5 lakhs, start less than 10 lakhs. So start off first, invest in trading. Whatever SLs you're going to take, whatever losses you're going to make in your early days of trading are the amount that you're going to invest in your education for trading. Do you get education for free outside? Tell me one field which gives you free education in the world today. So why do you think trading is any exception? You need to spend in education. Your stop losses and your losses in the initial days are the amount you are paying for your education, and then after you are educated, after you've learned trading, then you're going to move ahead and start getting more and more successful in your trading career. It's not just about today. Invest in your trading and start small. When you start small, you are going to make smaller losses. Starting small is not about making small profits. Ignore the profits initially. At least for 6 months to a year to 2 years, I would say, ignore the profits. Whatever profits you make, just make sure that you're happy about them at the end of the month. Because okay, you are fine, you are floating, you have not drowned into losses, you are just hanging in there. So just hang in there. It does not matter what capital you start with. In fact, if you're starting with a smaller capital, the better it is, because you can grow a smaller capital very quickly. You can watch this video I have made here on how to grow a small capital after you watch this video, so that you know how you can grow a small account. So if you start small, you're going to miss a lot less, and you're going to make sure that you accumulate the skill to trade and you develop your skill to trade and your control on psychology. And while all of this is going on, you're losing small amounts. You'll be losing small every time, a very small piece of your capital every time, and that is not going to amount to a big chunk of your capital. If you want to gain mileage in this field, you must ensure that your fuel, which is your capital, is in the tank. How can you expect to go on thousands of kilometers of driving with just a little fuel in your gas tank? Will you be able to do that? Your tank needs to be full, right? So that is what this is about. You want to go long in this journey of trading, you need to have a lot of capital. A capital which will ensure that you last long in this journey. So ensure that you start small, initially miss small, and then progress. As you progress, you can keep adding on to your capital, you can keep compounding your capital, and your equity curve will definitely grow. So this is what I wanted to share with you in this video today. I hope you have liked this video. These are very important points that every new trader and every newcomer to the stock market should know. If you've liked this video, please like and subscribe to my channel. Also hit the bell icon and share this video with your friends and family and colleagues. Thank you for watching, and I'll see you in the next one.